Welcome to the Bound to be Rich podcast, where I attempt to reverse engineer people who seem to be successful no matter the circumstances, so that you can apply those lessons to your own life. I'm your host, Ismail Hamed. One quick thing before we get started. I am starting my own email newsletter, and I would love for you to join it. It's going to be like a personal note from me to my friends of all the best things I've come across that month. From hacks and tips, interesting stories, products, books, ways to make money, and who knows what else. It's totally free. And if you don't like it, you can always opt out at any time, so there's no downside. The link to join is in the show notes, and I hope to see you on the list. In this episode, we are joined by Thomas Becker, aka Tomikazi, the CEO and founder of the Financial Cloud. Tom has a fascinating background with experience in sales, programming, and law. In my opinion, this rare combination gives him a unique perspective on financial markets. His focus now is the Financial Cloud, where there's a community of thousands of students learning how to trade profitably. We dig into his journey as a trader, and we discuss a ton of different things like how he was able to predict many of the short squeezes that happened this year, what makes a trader successful, why do most people actually end up losing money, what are realistic returns to target, and much, much more. Let's dive in. Thomas, thanks so much for joining the show. I appreciate you making the time.
Absolutely.
So, it was hard. Like I said before, it was hard to find a lot of information on you, but I did some digging, and I think I relate to you on a couple things. If I have this correct, you have a daughter.
I do.
Right? And you've got another one on the
2
way.
weeks from now, yeah, maybe today. Who knows? It's she's been having contractions, so I might get a call in the middle of this. You never know.
Hey, it'll make for some great.
Yeah, I'd be like, oh, gotta go.
You know what's funny? It was when I was having my second, I had to reshuffle a lot of interviews that I had scheduled.
Sure.
Thankfully, everyone's pretty understanding. But my second one was a crazy story where literally was about to give birth on the way to the hospital. But we'll save that story for another time. Do you know what it is? The gender?
Yeah, I'm gonna have another girl, so all girls.
Nice, lucky guy. Mm-hmm. I'm curious for someone working from home, because I have gone through this lately. How do you manage that as a father, and then with a pregnant wife, and now with another one coming? Because the second one was very challenging for me personally.
I'm looking forward to it, but not handling the mix of work and with the wife. I mean, she works from home too, and we have a daycare that one of our daughters will go to, but we're gonna kind of take it day by day and see how it develops. But I work all day, and then at night I work as well, because there's always, like, during the day we're trading and everything, and then at night is when we're doing the developing, and it's a lot of time. And having another kid is going to be extremely challenging to see if I can still do everything. But we'll make it work. We always do.
You probably can't. You probably can't, just so you know. The first couple months is going to, I mean, from my experience, it was just really rough. And I think the hard part about, like, I was talking to my brother, they're younger, you got all the free time in the world.
Yeah.
And I reminisce about, like, time I wasted, because now it's like, how do you squeeze everything into such a small limited amount of time? It's a challenge that I haven't really solved yet.
It's like, I wish I knew now what I knew when I was 24, and I could do everything that I'm doing now and have it done then. But you can't do that. You can't go back in time. You get to take what you can now and you do the best with it, right?
Right. What was your career before? Were you a developer before?
I have you could write a book about my careers, I should say, careers. So, like, I have a dual Bachelor of Science in History and Political Science, but I actually went to college for computer science. But I hated the classroom learning style of trying to learn code in a classroom, and, like, watching them write code on a chalkboard and stuff just doesn't work for me. Like, I have to do it and learn how to do it. Like, I'm a hands-on learner. So I was originally going to be, like, when I was in the 1990s and early 2000s when I went to college, I figured internet law and coding law was going to be the future of law. So I always wanted to be a coding lawyer. So basically I would learn computer science, and then I would go get my advanced degree in law. And so that was kind of like my career path I was going to take. Unfortunately, life doesn't always turn out exactly how you planned when you're a kid, but so I did 2 years of computer science and ended up switching my major to history and political science just to get my degree so that I could go to law school. Um, and then I took the LSAT, scored in the top 8%. I think I was 92nd percentile, so did really well. And then I interviewed probably 10 different lawyers to make sure, like, because law school is not cheap. I was like, I'm about to spend 150 grand. Is this exactly what I want to do? So I interviewed a bunch of high-end lawyers, some corporate lawyers. I had some connections and some corporations where some lawyers agreed to let me interview them. And I was kind of on the fence, so I was like, well, let me take a year and work, and law school will always be there if I want to go back. And I got into sales, and I love sales. I was good at it. Did sales for 15 years before starting the financial cloud. So that's been my career last 15 years. I've sold office supplies. I worked with the government and did government contracting for road repairs. I've done worked in the oil petroleum industry doing maintenance products for dealerships, and ran the whole central state of Wisconsin. Madison area, had a big territory there where I was a manager the last couple of years. It's been a good experience, managing a sales team as well as doing sales. You meet a lot of people. It's been a crazy career though.
That's definitely a interesting intersection of different things. Do you code now too? Like, do you program?
Very limited. I'll be honest, like over 15 years, my coding skills have deteriorated. I haven't kept up with it. So I have a whole team that I work with them, and I tell them what I want. Basically, I do the algorithms and I lay them out and all that, and then they do it in the different languages that we need for whatever medium that we need to present it on. So we have, probably 5 different languages that we use between everything.
Yeah, I haven't really met anyone with, like, for you to score that high on the LSATs, and you're obviously clearly very intelligent, but then to not do that and go into sales is not common.
Well,
the
real reason I didn't do it is the lawyers are like, well, you're going to make a lot of money, right? But not right away. They're like, you're probably going to need to spend a couple of years working for the government, making 40, 50K a year, and you're going to be working 100, 120 hours a week. And then you can go into private and make, 250, 300, but then you're going to work even more. And then when you're 40, 50, when you become a partner, then you start working less. And I was like, so I'm going to be working 100 hours a week, not making a lot of money right out of college. And a 20-year-old me was like, that sounds awful. So I turned out you could make the same amount of money in sales working 40, 50 hours a week. I was like, that sounds great.
Do you have any general sales tips for people? Like, because I found that to be a skill that applies in anything. Like, I'm sure you use it for the
Oh yeah,
Well.
absolutely. I mean, my biggest asset is always being truthful and putting myself in the other person's shoes. Like, okay, what would I want a salesman to say to me, basically? So, being personable, opening up, and not bullshitting people, because people can sense, when you're bullshitting them and you're just trying to sell them something. If you genuinely believe in the product, that's the step one. So you have to believe first, because if you don't believe, there's no reason anyone else is going to believe. So I have found, like, I've tried to sell different things, and the things that I was really good at were the products that I've truly believed in. And when I tried to sell stuff that I didn't believe in, it was a short run. Like, I was like, I can't do this. I just don't. Like, I got it. Like, I think I had a 3-month stretch where I tried to sell phone book advertising, and I was like, I can't do this. This just isn't a thing anymore.
Yeah, that makes sense. So, all right, so this might be a good segue, because I'm curious about the origin story for the financial cloud.
Yeah.
How it started, where it came from, and specifically, I guess to kick it off, is I was floating around these Discord groups. I don't have to mention them by name, but there's a few of them that I was in, and I saw all the people that you have on your board and your team. I saw them in the other groups. You were more, I might be wrong, this is just my perception. It seemed like you were more under the radar in terms of, like, in comparison to them being out there as much. Yet you were able to recruit them and start your own big thing. So I'm just curious, how did that start, and how were you able to bring in all these great people?
So,
especially if you seemed like you were more under the radar.
I was more centralized in, like, two or three different groups, so maybe my reach wasn't as far as them, and I wasn't as big on social media until recently in the last year or so. So I've only been doing the social media, Twitter, Facebook, that kind of thing. And, I was never really big into it, but you kind of need it these days. So here we are. So I always had great relationships with all of them. I've been trading with them for years. All of them that are on my team, at least 2-3 years for most of them, and some of them I've met more recently, just because now the word's getting out, obviously, with what we're doing. So we're attracting really bright and really good talent now. So I've always had good conversations, and we've had private groups that you probably aren't aware of. Maybe 100-person discords that we just would chat with each other. So we've always had the idea of, hey, if anything ever came up where we could work together, we always agreed to do it. So, it originally started where it was just the newsletter, where we're like, hey, we can write a couple ideas every week. People can learn. People can make money. And in return, we can, it's be like a hobby where we can make a little money as well. So it's like, if you're really good at something, you should never do it for free, was something I was always taught. So that was kind of where, like, I've been trading for 5 years, and I've always wanted to do it full time. And so this was a way for us to, and my wife mainly, is like, well, you're trading, it's not guaranteed. She's like, if you're going to give up your full-time job, where was doing really well, and I was making plenty to live on, where I didn't need to give it up, and I could have done it probably another 10 years and been happy, but this is way more fun doing this, in my opinion, and I'm so happy I took the plunge in doing it.
So before you started this, I'm curious, because this is not something I asked Thomas too. When you're in these Discord groups, like you mentioned, you were in a couple, you were more centralized. You're kind of just working for free, right? So
yep.
What was the draw or the appeal to you? Because you were doing well in sales. You obviously had other stuff going on. Why were you willing to work for free there when you weren't willing to work at the law firm for low money?
I think I just enjoyed it. I mean, it was just the community. I really enjoyed the community, hanging out with people. It's like when you go bowling, you don't make money going bowling, right? You enjoy doing it.
Yeah.
It's kind of the same mentality where it's like, hey, we're all hanging out, we're having fun, we're making memes, and we're making money, and because, we're sharing trading ideas and things like that. So it was a way to potentially make money through trading, but also having fun at the same time was the kind of the way I approached it.
Yeah, and I'm glad that you mentioned the. So I'm in a similar position where I've been getting most of my income from trading, and I'm looking to buy a home, but I don't look at the trading income as I can't count on it to pay a 30-year mortgage, right? So it's all about generating like cash flow elsewhere that is coming in for sure to pay that mortgage, and then whatever you make. Like, I've had some monster wins,
yep,
but you can't count on that, and it's just unpredictable when that's going.
Well, the thing is you can be profitable for years, and then you have an unforeseen black swan event. Like COVID last year, there were signs that it was happening, but then all of a sudden one day, boom, limit down, limit down, limit down, and people got wiped out. And having the trading income is great, and you could save and do that, but having a reliable income, building a business, you should always diversify. You should never put all your eggs in one basket. Having multiple streams of income is 100% the way to go, and I think most people should have multiple streams of income. Even if you're working full-time, having that one full-time job is great, but what happens if you lose it and now you have no income? There's no backup. So, trading is one stream of income, TFC is another, and, I have a couple other streams of income too that I do on the side. If you want to secure your, like what?
Yeah.
Like crypto mining, things like that.
Nice.
We're thinking about diversifying into different things through TFC as well to protect the business. We're talking about getting into swag. We're designing different swag. We're probably not going to make any money on that, but that's more to give back to the community because people have been asking us for some cool shirts and stuff. But yeah, crypto mining's a big one that I've been getting more and more into. You kind of see crypto people talking about it as the future. It's super interesting. So that's
So on that note, I know I'm just following my curiosity.
Sure.
So we might not follow a straight line here, but I think I saw Jonte. I was talking to him about mining. Did you partner with him on mining, or did you guys do it separately?
We work together on it, but we have separate. We don't have like a business together on it. We've talked about starting like a a crypto mining business together, and we're still kind of figuring out. The problem is it's so hard to get miners right now. With the computer,
Yes.
with the chip shortage, it's like you have to pay so much money to get the good products right now. It's like, okay, well, we have a war chest where if the prices came down, we would consider it, but the the investment you would need to make based on prices and because crypto is so volatile, it's good to start small and scale up as you make profits, but putting like $500,000 into a crypto mining business where you're going to pay 200% retail price on a miner it's tough right now, to be honest with you.
Agreed. And I remember going back and forth with him on it as well. And the reason that, and another reason I didn't pull the trigger is that the whole Ethereum mining going away soon
Yeah,
kind of, yeah, that gave me some pause. Yeah, you can mine other coins, but I don't know them as well. So I'm like, you know what? Let me wait this out. I'm not going to pay 200% on the graphics cards with Ethereum mining going away in the next year or two. It didn't make sense to me from that point of view.
well, exactly. I mean, you have staking where it's like, okay, why don't we just buy a bunch of Ethereum and stake it then? At the same time, then you don't even need the equipment, and you're
Exactly.
getting 8 to 10% back a year. Excuse me, but I don't know. It's you always got to keep the options open, but um, right now it doesn't seem like it seems like you would overpay and get an underdeveloped return. So it's like, okay, what's the return on capital look like there? Should I just go buy a bunch of real estate that's booming right now and then flip that in a year? There's all different types of areas you can do that, and that's real estate is another one where I've made small investments in land around where I live. So when you see, I have some good connections in the banking and real estate in Wisconsin. So sometimes if a property comes up, on a foreclosure or something like that, which you haven't been able to do because people can't foreclose on stuff, but now that the moratorium is being lifted more and more, there's going to be a lot of good real estate opportunities coming up. But it's kind of similar to trading, but not quite the same, in terms of investment and long term.
Are you just buying land, or are you buying things to position as rentals, or what are you looking to do in the real estate? Are you flipping?
Currently, right now, I'm just doing land and development areas. So basically, central Wisconsin, things like that, where people like to travel and develop around like water and things like that. You can sometimes get some good deals, and then in a few years when those you have big investors come and develop those areas, you can flip the land for a nice premium. Sometimes 200-300% if you can get a good price on it. Entry price is just as important as exit price.
I'm sure that applies elsewhere
Yeah.
too. So how do you mentioned the limit downs during the COVID and the instability of the income? How do you guard against that? Like what do you do, or what's your advice to people? Or you made money trading? Do you take it out, put it somewhere else? Do you use bigger size to make more money? Like how do you handle making the money in trading?
There's a great quote from Game of Thrones where they say chaos can be a ladder. And you can actually generational wealth was made during the COVID crash as well as the rise up. So if you were positioning yourself to make money on the way down, you could then, if you caught the bottom, flip that money you just made and then ride it all the way back up. So I mean, following some of the tools that we have now, I wish I had them then because we would have been a lot more profitable. We had some of the tools that we have then, but the retail tools as well as the tools that we were making is nothing like we've had in the last couple of years. You see a bunch of different services coming out now that are becoming more and more popular that are bringing the tools that institutions had. Now retail traders are having them, and that's why it's becoming more popular, and that's why the retail investor now is so much smarter than they were 5 years ago, because now they actually have tools that they can day trade, they can swing trade more properly than it's just, a lot of times it was like throwing a dart at a dartboard and hoping the market makers let us make money. You ever feel that way?
Yeah, it's still
Yeah,
sometimes.
it's like I don't know what I'm. Like, there's days where I'm like I don't know what I'm doing anymore. And then like a day later, it's like yeah, I just had 1,000% win. It's like yeah, this feels great. The roller coaster of trading it's fun, but it can get to you if you don't manage your risk properly. Risk profile is something I talk about a lot, and if you don't know your risk profile and you let your day trading affect your life, then you're doing it wrong, in my opinion. Like if you're taking too much risk and it's personally affecting you and mentally affecting you, you need to scale back and you need to probably make a better plan, in my opinion.
Yeah, I think I mentioned this too in Tay's episode. And by the way, people that haven't heard Thomas Watts and John Tay Porter's episode, you can scroll back and check them out. But I think I said to John Tay that you got to be a little sick in the head to be a trader, because being able to handle these volatile swings where you're down 80% one day, up 1,000% the next day, it's mentally taxing. And I think that's, to me, the main appeal of something like the Financial Cloud is the community element, particularly like listening to you guys on the live chat. Having other people, because it's like a lonely thing that you're doing by yourself at home.
Yeah, the community aspect is nice.
It's huge to me. Otherwise, you kind of like second guess yourself. So having people that are level headed that you can listen to or bounce ideas off of is very valuable.
Yeah, I'm looking at the live chat right now. I think there's a couple hundred people in it, and looks like.
How do you guys handle that now, by the way? Do you let anyone speak, or is it just the traders that you have on your team
So
speak?
we originally had let everyone speak. It became too much, and then we switched to push to talk, and that became too much. So now we have basically approved people. So the Financial Cloud team can talk, as well as people that we have vetted that we believe their knowledge is beneficial to everyone hearing. So we do have a chat where people can ask us questions and we'll answer them on voice. So it's just a voice Q&A. It's been working really well. We've been doing that for about a month and a half now. So as we've grown, we've had to grow with it and make changes. And sometimes I don't think everyone likes that they can't talk, but unfortunately, you got to do what's best for the majority of people. So, having the ability to still ask us text questions still works really well. And we've had some good responses, and people have said the value of the information has gone up tremendously. So,
Agreed. And you mentioned this whole trend towards like power to the retail investor. And that's kind of manifested itself in all these short squeezes that have been happening. So you're kind of like becoming the short squeeze expert.
Yeah.
It seems like to me. You've really focused on this, and I've watched some of the videos that you made explaining it. So I'm curious to just hear you riff on, like it started with GameStop and AMC.
Yeah.
And those, like I had massive wins with AMC. Like that was ridiculous.
Yeah, we got in AMC I think around $4, and we actually have a resident expert in AMC. Believe it or not, he is a lawyer and codes. So he took my dream job and did it for himself. That was kind of how I connected with him. It was like, dude, you literally were doing what I was going to do. So
Right.
he made himself a ton of money on AMC back in February, March, and then he bought Leaps at the time, wrote it all the way down, and then wrote it all the way back up, and he still is holding, he's kind of the DFV, the deep value of AMC. He's like the guy for AMC that, he was the deep value was the guy for, what is his name now, Rapid Kitty or something.
Yeah.
But
the famous guy for GameStop.
I think he had to change his name because he had a swear word in it. But yeah, he made what, 40-50 million off GameStop. That's a crazy story. Like that blew up retail trading. It really, us catching that too was huge for all the people that were, when we were still a little bit newer, because that was right when we were starting out and right when we were testing out that was right when we were testing out the short squeeze stuff, and it worked really well. It's exciting.
So do you think that that's like those are like one-time fads, or do you think that it's now spreading to all these other stocks? Like I don't even know what these companies are anymore.
Well,
There's,
short squeezes are not a new thing. GameStop, just because everyone was at home trading, became a phenomenon, and with Reddit and the Wall Street Bets, pretty much putting a flashlight on it, a beacon on it, it blew up in the media. But short squeezes have been around since the stock market's been around, since you've been able to short. Back in the day, I still think Volkswagen is the greatest short squeeze of all time. I don't know if you're familiar with the Volkswagen squeeze, but I remember my first squeeze I was part of was actually Tilray. It was one of the most exciting days. I was literally working for a food delivery company, and I was delivering food, and I'm sitting there on my Robinhood app. This was my first, literally, like one of my first months of trading when I'm like the new guy years ago, and I'm like, well, it's just like, oh, Tilray, it's at $30. Oh, it's at $100. Oh, it's at $300. Same day. I was like, what is going on? It got halted at like 150. It opened up at 250. Got halted. Opened up at 300. And then by the end of the day, it was back at $100. I was like, how do people trade this? Like, I'm sitting there. It's crazy.
That's my next question, and I'll link to the video for everybody in the show notes of you explaining short squeezes. But how do you find? I guess it's a two-pronged question. Can you find them? If so, like, what do you look for? And how do you avoid getting caught in the crossfire? Because eventually a lot of them
Oh yeah.
drop significantly.
So
Yeah.
I actually have great recent stories on this. We found just recently SPRT, ATER, specifically. Those are really good short squeezes, and we're following some other ones currently as well. So for a short squeeze to happen, you need to have people that have shorted it, right? So basically, if you're unfamiliar with shorting, is say if you go to a bank and you take out money, you have to pay that back with interest, right? So when you're shorting a stock, let's say you own the stock and you're not doing anything with it, you can loan that share out to someone and they can do whatever, but eventually they have to give the share back to you. And then you charge them interest for however long they hold it, right? So typically what we look for is a high short interest, and then we want to look at what that interest rate is, called cost to borrow. So let's say like for SPRT, for instance, we're like, oh my God, this thing is 60-70% shorted. And it also has a 300% annual short interest. So every day someone holds it, it's costing them 1%. And the stock's going up. So it went from $4 to $8 to $10 to $20. And I remember, this is a great story. I haven't told anyone this, but one of my traders called me like 10 minutes in aftermarkets, and he's like, hey, Tom, it's at $25 after hours right now. I have a rather sizable position. Should I sell it right now? I'm up huge because I don't want to lose the money. And I was like, it's gonna go. I hate to tell you not to sell it, and then it doesn't go. But I was like, everything in my blood and all my spider senses, I was like, it's gonna go. Next day it hit $60, and he's like, he made $160,000 on it. It's crazy. We had multiple people make $100,000 on that squeeze.
Which stock was that specifically?
Support.com. So it's actually GREE now. Yeah, it was 100% shorted, by the way, when it got switched to GRE. It's a crazy thing. Some people got caught in that because they kept seeing, I even got caught a little bit in it because I was playing with some runners on it. But, I made a ton of money on it. I turned 2K into 50K on it. It was a big story. But how do you know when the end, I guess, is probably what you're probably wondering as well. Typically when you get those major gap ups like that, and then it becomes plastered all over the internet, that's when all the shorts are like, yeah, I'm going to short this thing down even more. And that's why you saw it go from 50-60%, and the short interest went down to probably like 43%, but then it went all the way up to 95%, 100%, because the shorts just kept attacking it. Because once the institutions, there's like delta and gamma hedging as well, so once the institutions know that the top is in and they don't have to cover anymore, they'll just short it all the way down. So, I mean, people that shorted at $50-$60 made a killing on it. Because I think I'd have to look at where now, but I mean, that thing's down probably 70% since the top, and so people made a killing on it. So you can make money, like I said, on the way up and the way down, as long as you can know the pivot points is the big part.
It can get complicated too. Like I remember when GameStop went crazy, I actually opened a small put position on it, and the stock went up the next day, but my put position went up as well.
Yeah.
And I think a lot of people don't understand. Like, I guess the IV went up significantly.
Implied volatility, yeah. So as something moves faster and faster, the options pricing have to increase to basically account for that. So, yeah, I remember Tay actually put an incredible amount of money into puts on GameStop, and the stock didn't go up, or didn't really go down, but he still was profitable on it, similar to what you did. He's like, dude, I made money on this, and the stock's up $10. I was like, how?
That's why I was like, let me sell this because it doesn't make sense, but let me just get out of this because it's not going in my direction. So you mentioned that small account challenge where you took that 2,000, I think it was up to 50 at one point.
Yep.
And that was primarily for short squeezes, which we just talked about. But almost everyone I talk to, and this is why I like you guys. You guys are very authentic and real, and I think people have these images of grandeur with trading. Oh, I'm going to make all this money right away.
Yeah, that's a once-in-a-year thing. Like, it doesn't happen every day.
But that's why almost every successful trader I talk to have stories of blown accounts, especially when they first start out. So I guess, can you talk to people about the reality of learning to trade?
Yeah.
Is it inevitable that you blow some accounts in the beginning while you learn? And why did people blow these accounts in the beginning? And how do you avoid that?
Yeah, my first newsletter I wrote basically the cycle of trading for a new trader. The 7 stages of trading denial, I call it. But basically, you start out, you're making you do your education, you make a plan, you make your first trade, it goes well, you make some money, and it gets addicting. So you eventually you get so comfortable in your trades that you take more risk, you take larger positions with shorter time periods. So you're all of a sudden opening yourself up for major losses, and you get overconfident and you make a giant play and it doesn't work out, and then you blow up your account because you refuse to believe you're wrong. Two, you're down so much you say, "F it, I can't lose anymore. I might as well hold up now." And basically, you're praying to the stock gods that you're like, "F it, I might as well write it out now." And then you're like, "All right, I'll sell it 95% for a 95% loss," and then it always happens where it goes up the next day, right?
Yeah.
But it's a psychological thing where people, they get comfortable and complacent and they want to take more risk because they're like, one, they get impatient, or two, it's going well, they're saying, I'm going to put my foot on the gas, and then they end up burning the car up, or blowing a gasket or something like that. So I have stories where I've blown accounts when I first started trading. That's actually why I started TFC, was because I was working full time. I didn't have the tools to sit there and look at my phone for 5 minutes and make a profitable trade, because I was like, oh, this looks really good just looking at my phone. If I didn't have time to do the research, how am I supposed to really know that's a good trade? So I would get into a trade, and then I would come out of a meeting or something and see I'm down 20% and be like, oh man, I should probably cut my losses. It's just, I didn't have the information available that I would need to make profitable trades while working full time. So I was like, what can I do to do that? So that was the idea with the newsletter, is give people the plan written out. They can follow the trade plan. And then eventually I was like, well, what if we could make something that would basically trade for you, right? Now there's algorithms out there that have certain win rates, and they trade shares and stuff like that. But what if we could make an auto trader that could trade options at a high profitability rate, and you would never have to do anything? You just hook it up, tell it exactly your risk profile, what you're comfortable with, and go from there. So everything that we're doing in terms of the coding size is working towards that end goal. So all the algorithms we make, all the stat tracking we make, is to improve that.
And now, a quick message from our sponsors. If you are a trader or interested in trading, I strongly recommend you check out the Financial Cloud. I've personally spent a lot of time in the last couple of years learning trading, following different people, and joining different groups. But as soon as I joined the Financial Cloud, I was blown away and immediately knew this was the best resource out there. It was like finding a diamond in the rough, especially in the world of trading where there's a lot of charlatans out there. I'm such a fan that this is actually the only ad where I personally reached out and requested that they let me promote them. So that should say something. I attribute a lot of my own success in trading to the Financial Cloud, and I love the team there, so I'm more than happy to help spread the word. I've also got several of my family and friends to join. My favorite feature is the live chat. So for literally the entire market day, I'm listening to professional traders calling out plays and describing what they're seeing. There are also algorithms they've built that notice unusual activity and instantly call them out to alert you. And I'll admit I was skeptical about bots at first until I saw how effective they were. So believe it or not, these plays are now the core of my trading. And of course, there's also the Discord group with a huge active community, nonstop education, and classes offered as well. Quite honestly, they do not charge enough for all the value they provide. Sign up via the link in the show notes to get a 7-day free trial and 50% off your first month. Or you can just use promo code RICH, R-I-C-H. And within that time period, you'll know if it's worth it. In my experience, it's been a total no-brainer. All right, let's get back to the show. Now, obviously, that sounds like the holy grail. Like
Yes,
having automatic
that is the holy grail.
trading and all that. But you can imagine people are skeptical about stuff like
Sure.
that. Like how they're naturally like just not. How can a computer trade better than like smart people? So I guess obviously it's proprietary, the algorithm, but generally, how do you address that? How can I trust this machine with my money to trade for me? Like people fail all the time.
Well, machines don't have emotions attached to them. One of the biggest machines aren't impatient and they don't have emotions. Those are the two biggest things that hold traders back is their emotions, as well as their ability to not be patient. You know, even my own team comes to me sometimes when they're having a bad day, and they're like, "Tom, I had this great plan," and and we call it paper hands, basically, where they didn't trust their own plan because they got impatient. They see their position size down 20%, and then the trade actually follows their plan to the T, but because they got scared and they closed out their position just to see that position rise up, a few days later, we're all human. When you see yourself down, you're like, I should cut my losses now instead of, because you're like, what if it doesn't go up? What if my plan doesn't work? Not trusting yourself is a big human flaw, and a machine doesn't know whether to trust itself or not. It just knows what to do. It's like, okay, this is the plan. I'm going to execute it. So, like, having proper algorithms is the number one thing we can do. So all the stat driving, all of the machine learning that we're doing, everything that we're doing, all the flow crunching, the technical analysis, the news sentiment, all that stuff that we're putting into our algorithms, is to say, okay, we know this one has an 80% win rate. We know on average it moves this much. We know on the losses it moves down this much. So then we can set proper stop losses, proper take profits, and so on and so forth. So when it just comes down to math and data crunching, you just play the statistical probabilities. It's like when you're counting cards, you're just playing the statistical probabilities, right? When you go to a casino. I mean, the stock market's not much different than a casino. You're just playing the probabilities. Like technical analysis, like rising wedges, cup and handles all have statistical probabilities they're going to work out. So you know how to position size properly and how to have your stop losses properly based on the statistics. So that's why like math and computer coding go so well with the stock market that a lot of people, some people are emotional traders and momentum traders and things like that. I'm more of a data driven trader. I like the data behind it. I like to understand why something happens.
Is it possible to come up with a formula to beat the market, or is that just like an unattainable goal?
I think we already have it, to be honest. I just think properly using it is sometimes what we have to do. So, I mean, most of our algorithms are at a 70% win rate, and people are like, what's a win rate, right? So that means 70% of the time you're going to probably make 5 to 10% on an option, right? People always have this, like you talked earlier in the show about a grandeur of making the 1,000, 2,000%. Like I've had trades where I've made 25,000% on them before. I don't know. I think I have the record in the Discord. I think it's 28,000 on a trade, $800 to $250,000 overnight. That's a good story.
Wow! In one day.
Yeah, overnight. So.
Which trade was that?
That was actually when I first started out. That's what got me addicted. So I've told this story a lot, but maybe not to your listeners. But when I first started out, I saw basically a falling wedge on Cigna, and I was like, "Oh, this looks nice. I'm gonna buy a couple hundred contracts. They're 6 cents each, right?" And so I bought, I think it was like 122 contracts, and next day it went down, and I was like, "Well, that was a waste of $1,000, right? I might as well hold on now, right? Hope and pray, right?" And that night, Trump came out and signed a new health insurance law, and all of the health insurance stocks went up 15% overnight. So Cigna went up like $30. So now my 7-cent contracts were $22 a piece, and I had 120 of them. I was like, I'm gonna go buy a Ferrari.
But I'm sure you were more sensible.
No, I paid off my wife's student loans and a bunch of my loans, and I YOLO'd $100K and lost that. So that's how you blow up an account, is you get overconfident. So I took half of the money out, and then I traded the other half, and I ended up blowing up that account. And that was when I stopped trading after that, because I was like, once you lose $100K, that's that changes you. So I don't look at numbers like I do now. I did back then. Like, numbers to me are just like numbers on a screen now. It's weird.
Yeah, it's kind of like a video game, and you have to get attached. But I had a similar story, and I haven't shared this before. I don't know if you remember the day Fastly dropped like crazy. I had a ton of puts on Fastly expiring that week, and I think it was a Thursday that happened. And it was a similar story. It was like a few cents, and it ended up being like $20, $30 a contract. So it was a massive six-figure win. But similar to you, all right, yeah, you saw the falling wedge, but it was really news-driven.
Yes.
So, like, did you look at that and say, like, I got lucky, or did you look at that and say, hey, I know what I'm doing?
No, I 100% got lucky. So let's call it what it is. Like, it wasn't me being a good trader. It was me winning the lottery, right? That was me with a scratch-off ticket and then hitting jackpots across the board. In no way is that normal, and the short squeezes is kind of like the closest thing you can get to predicting stuff like that. It never always plays out exactly like you think it would. So, no one has like just like a book like, hey, look at this. This is gonna, I don't have the 2020 sports almanac from Back to the Future that I don't have I don't have like I can't predict the future. So you do the best with what you're given, and that's why I scale in and I scale out of stuff. So like for instance, like SPRT, like yeah, I held a large position overnight, but I had already taken half my profits out before that because for me the rest of those profits, it was free money to me. So it's like I had already made money, my original position size back and above that. So now I'm playing what I call runners, right? So that's where you got to risk adverse and hedge yourself. Like, yeah, you could be 100% confident something's going to run overnight. Even just like today, like Palantir. Like, Palantir ran hard yesterday, and I was like, I bet you it's going to keep running. But I still sold half my position yesterday, even though I thought it was going to keep running. And look, it went up a little bit today, and then I think I saw it crash just a few minutes ago. But, I had already sold my position. I closed out the rest when I was happy, and then when I saw it broke my support, I closed the rest, and I never looked back at it. You never look back at a trade in FOMO, because when you FOMO and you get back in a trade, it usually never works. But
right.
It's
I just walk away.
Yeah.
But what you just outlined is someone that has experience. Like those, I don't know if it's a good thing to start your trading career with a massive win like you did. It's kind of
it's not.
Like you don't want to go to the casino the first time and make a ton of money, because then you get addicted and you just proceed to lose a lot of it. But it seems like you stuck with it and you learned. So like the way you just explained scaling in and scaling out, it's exactly what I do. And I think a lot of people fall in the trap of like they have $1,000 and they go all in on like one Tesla contract.
Yeah.
You can't scale in, you can't scale out, you can't really like do any position sizing, and that's where people get stuck. So I don't know if you have any general parameters of advice for traders of you want to be able you don't want to play things.
So when you're starting out,
yeah,
people want to play with real money. They want to feel like they have skin in the game, right? So maybe you start with a small amount, $500,000, but you should also paper trade. You should always paper trade when you're starting out. Until you can be a profitable paper trader, you shouldn't really use real money. Because if you're not profitable with fake money, what makes you think you're going to be profitable with real money, right? But if you feel like you got to learn the hard way, like most people, I would say probably 95% of people, maybe that number's a little high, but most people feel like they got to use real money. And, the cost of education is not much similar than going to college. You might spend $10,000, $20,000, $30,000 before you actually learn how to trade properly. For me, I think my first year I lost $40,000. Like, it was a very expensive life lesson, and that's when I hit the big win, and then all of a sudden I was super profitable, and I've been profitable since. But I also took 6 months off, learned, studied, paper traded until I was profitable again, that I felt comfortable coming back. And then I started developing all the tools I needed to be even more successful, because I was like, there's not enough tools out there for the retail trader. And I was like, well, if they're not out there, then I need to make them. So
what do you think is realistic guidance on returns for people? Like, everyone sees these 1,000% returns. Like, realistically,
I mean,
what can you expect to make?
People need to understand, like, 10 to 15% annual returns is what Wall Street expects. So if you're making 10 to 15% a day, that is insane. I made a video. It's my number one video I ever made, is compound interest adds up over time.
Yep.
If you're making, we have a lot of guys actually in the group doing what they call 3% a day challenges. So they're like 3% a day added up over a year on a $10,000 account. You could be a millionaire by the end of the year if you're making 3% a day. Like, people don't understand. It doesn't take huge wins. It's consistency that's going to make you money. And when you're consistent and you stick to your rules, like, people need to say, like, hey, I need to make sure I don't lose more than 10% on a trade, because then I only need to have a 10% win to make it back. You lose 50% on a trade, you have to have a 100% win to make that back. Like the more you lose, the harder it is to continue. So, like I've had days where I just lose 10%, and there may be a good trade later that day, and I said, you know what, I'm not mentally right to trade anymore today. I'll come up with a plan, and I'll come back the next day, and the next day I'm up 20%. I forget about that bad day. I don't think about it ever again. But you have a day where you lose half your account, that changes you. And not many traders can come back from that, and they just give it up entirely. They just say, this isn't for me. I'm just going to go to Fidelity and give them my money. And there's nothing wrong with going to Fidelity or whatever broker you want and giving them your money. I would say most people should do that. You know, trying to trade your own money is not an easy thing. We try to make it easier for people, but you have to understand it's still incredibly hard to be consistent. And that's why investing in yourself over anything else is probably the best investment you can make in education-wise. And that's why we focus so much on not only free education, but is the best education we can possibly make.
I love that you talked about the compounding, the small wins. Actually, that's my most viral TikTok video ever, is where I talked about you could take $1,000. I mean, this is extreme, obviously. It's just a mathematical example, but you could take $1,000, turn it into $1 million in 100 days by just getting 7% a day. And I think the problem is trading is very psychological. So you have $1,000 that you start with, you make 7%, and you don't want to sell it because it doesn't feel like a lot. It's like, oh, I only made $70. It's nothing.
I got a great story on this for you when you're done.
Yeah, go ahead. I think I just want to set you up and say the small wins consistently add up to a lot. The problem is people don't feel like it's a big win, and they hang on for more and they lose. Like people are up 80% and they don't sell.
So
80% is a lot on one trade.
You can track this. So you're in my Discord. Can you see the Rapid Flow Challenge room? Do you have it up right now?
I don't have it up right now, but I can check while you explain it.
Well, either way, we've made an algorithm that detects basically extreme buying in stocks, right? And we found out these generally return 5 to 10% returns all the time if you catch them. They're very in and out 5-minute trades, right? So one of our users, which I think you should interview, I think it'd be a good interview for you. His name's Dan. He's like, well, F it. I'm just gonna take my account and only trade those, right? I'm gonna take profits at 5 to 10% every trade, and he took it to the extreme where he's putting half his account in every trade, right? But he's done it for a month right now. He started with $10,000. He's got a log of all of his trades. He's at $39,000 after 1 month. And he even has, over a year, if he continues to do this, he will have 5,000% returns over the year on his entire account. There's nothing out there like that. That's like it's so exciting when you see all this work and time you put into data crunching algorithms work out, and then you're not even the one using it. You see someone else do it, you're like, damn, son, that's amazing. So,
well, I think that's why what you said about the computer is an unemotional machine. That's, to me, the real value of having an algorithm. It's just math, right? A lot of people wouldn't take the gains at 5% because it's not enough. But like you said, and I say this all the time, I remember when 10% a year was like, oh my God, overperforming.
Yeah.
Now people don't take
7 to 10% in your 401k annual gains. People go gaga over that because over 50 years, that's going to be your retirement. Like if you can do that over a year's time, make your retirement. That's crazy. If you could do 10% a day, you don't understand. Like I did the math, and I was like, I need to do this with 100K because with 100K, you could turn 100K in a month into $4 million. 22 trading days, 10% a day. It's insane.
And to be honest with you, I don't know if you disagree with me. I feel like literally almost every trade I have ever entered, I have been up.
Yes.
10% at one
yes.
point. You just don't take it. That's the problem.
That's why I made the small account rules. I was like, when you're day trading, your goal in a day trade should be 5 to 10%. When you're swing trading, maybe 20, 30%. But honestly, your goal on every trade should be 5 to 10% because most of the time when you get in a trade, it's for a reason, and it's generally probably a good trade that you get into. But one, you hold too long, you don't have a plan, and you don't know when you're supposed to take profits or your stop loss, and that's what burns people is they don't have a plan when they get in the trade. They just see, people saying GME, I should buy this, but then they're like, I don't know when to sell. Well,
And yeah, that's the other thing with these services that have like call outs and stuff like that. It's hard to I don't know how you feel about it, but it's hard to tell people when to buy and when to sell.
it
It's
is.
like a unique thing. Yeah.
It's again, it comes down to everyone's different, right? Everyone has a different idea of what they want to do. So it's like, how do you tailor make a call out service when everyone on your service is different? And so, you know, I try to give people ideas and I say, hey, here's what we think it can do, but here's what your stop loss, we do price targets and stop losses and things like that when we can. And, we chart it out, use technical analysis, but, nothing's ever 100% perfect. So if you have in your mind that you're just trying to make 5 to 10%, in general, most ideas that are going to do that for you. I think like our newsletter win rate, with 10% gains is like 90%. It's insane. But how many people, like you said, take profits at 10%?
Nobody. It's like everyone says, "Oh man, if I had Bitcoin back at 1,000, you would have sold it at 5,000." Like no one's going to hold that all the way up to 100,000. It's just a
I have
dream.
I have that crypto story too. With Dogecoin, I owned 100,000 Dogecoins at, or what was it? I think it was a couple 100,000 when it was like 0.002, and I sold it at 0.003, and then of course it hit 70 cents, right? So
Yeah.
I would have made me a Dodge millionaire, but I sold it for $5,000 profit.
Do you dwell on that afterwards? Like, oh my god, I missed out.
I have so many of those stories where it's like if I would have held one more day, like I had Amazon calls one day. I sold for $200 loss, and the next day it went up $150. I would have made $200,000. It's like how you're just torturing yourself by doing that. If you live in the past, you'll never be able to make it into the future. If you're always tripping over your own past, you're never gonna progress in the future. And so, yeah, in reality, you're still gonna think about it, but letting it affect you, you should use it more as a learning experience than more of, oh, that sucks kind of experience, right? It's like, okay, analyze it. What should I have done to prevent this from happening again? That's what you should take from it.
What would you have done differently with Doge? Scale out?
Probably the same
I
thing.
mean, yeah,
In
you gotta keep in
reality,
mind.
here's the thing. Like we just talked about taking 10% profits, and now you're like, how do I prevent myself from not taking the 200,000? But I would rather, like, it's like baseball. Would you rather have people that hit for 500%, but they always get singles and doubles, or would you rather have someone that hits 100 or like 0.15, but always hits home runs? It's like, you got to do the stats, and the stats say you'd rather have 500% hitters because then you're going to be consistently driving runs. Yeah, you're going to have those games where you hit 10 home runs, but then you're going to have those games where you hit none. So it's an all or nothing prospect, right?
Right.
And having a win rate and being consistent is really what the name of the game, and that's how you become a profitable trader, is consistency.
Right. You mentioned not everyone should be trading, right? So, I guess who is the financial cloud suited for? If you think that most people should not be trading actively.
Well, I mean, if we get our golden grail, if we get our holy grail of the auto trader, it wouldn't really matter because we would trade for you. But I mean, we're for the people that want to manage their own money, right? So we have the education, and then we have the tools where if you use the education, you could be successful. But if you don't educate yourself where you don't know how to use the tools, then we're probably not for you, right? If you just want us to trade for you right now, yes, we are working towards that, but right now, nobody can trade for you, right? So, and if you just try to do things without understanding, it's never going to work out. There's the phrase, give the man a fish, he eats for a day. Teach a man to fish, he eats for a lifetime. And that's really what we're about. We're about teaching you to fish and then giving you the bait that you can go catch a big fish with, right? So that's what we're about, is teaching you to fish and then giving you the fishing line and the bait with the tools that we have.
What do you think are the main selling points, or what have you heard from people? What are the main benefits of the financial cloud? Like I said, for me, I love just trading and having the voice chat on all day. Because I'm like, sometimes I'm looking at the same play and I hear how you guys analyze it. I'm like, you know what? Maybe I shouldn't FOMO into this one. I think it keeps me grounded and doesn't feel as lonely. So like, what do you think, or what have you heard as the most popular feature?
I mean, the algorithms are obviously incredibly popular. The small account is incredibly popular. I think that's the small account always gets popular because people have, $1,000 to $2,000. They dream about turning it into 100,000, right? So that's always going to be popular. But then you have your big timers that have the large accounts that they just want to use the service, and in all likelihood, 90% of our subscribers don't really say anything. They're just lurkers. Probably, I don't hear much from you, but I know you lurk around because it's just something in the background that is providing, education as well as focused ideas. So for me personally, like, I love the tools. I love the community. For me, obviously, I live in it, I breathe in it, I do it every day. The community for me is huge. Building that community where we don't yell at each other, we don't make fun of each other. If someone has a big loss, you don't. It's not Wall Street Bets where you're like, haha, loss porn, right? No, it's like, hey, what happened? What happened? How do we fix this? How do we prevent this from going forward? Talk to me, like, and everyone's super supportive in that way, and that's what I love is we're all here with the same goal. We want to make money, right? So the community and the tools are how you do that.
For someone so focused on that and doing this the right way, how do you feel? Because there's definitely a trend now, and I see this all the time. People start their own services and they don't even know what they're doing, but it's like a cash grab. There's a lot of shady people in this field, which makes it harder for the right people to succeed, I would think.
I think the big thing, I didn't make this for my subscribers. The TFC is for me because I personally use it. I want to make something that I can use that makes me better at trading. And if I personally, like I said earlier, one of the first things we talked about, if I personally love the product, then other people will too. And so, like, because I personally use it, I need to make it the best I possibly can. And if I love it, then others will probably love it too. And that's my core philosophy in life. That's what my sales philosophy is. If I love something, it's a great product, people will want it. There's a reason why people love iPhones, because it's a great product, right? That's what our whole goal is, to make the best product there is, and we'll probably never stop. There's no such thing as perfection, right? But there is the chase to achieve it, and that's what we just strive for every day.
Yeah, that's a perfect full circle moment. Before I ask my two final wrap-up questions, I ask everybody, do you have any other interesting success stories or like things with members? You mentioned people making 160,000 in a day, the short squeezes, or the guy that was doing the 5% a day, and he made 10,000 to whatever it was, 30,000 in a month. Is there any other cool success stories or member stories like that?
I mean, the short squeezes are always super fun. We're always on the lookout for those. Those are what provide the flashy headlines, right? Like, hey, I turned 10,000 into 100,000. I don't know if Tay told you he turned 50K into $1 million in a week. So,
yeah, that was wild.
Yeah,
that was wild.
I mean, we see
he disappeared after that.
Why would he need to trade after that? Like, we have this running. Me and Avery talk about this a lot. You really probably only need to make 10 to 12 trades a year. You do your research, those well-focused research plays. If you do them right, you can be extremely profitable, 500, 100,000% annual gains, if you only take the trades that you have the full confidence in. But being able to turn it off is something that people almost can never do. Like, it's the over-trading mentality. They always feel like they got to have skin in the game. And I've been trying to teach people that, but even me, I still am human. I love having skin in the game. I love gambling. I love going to the casino. But there's a difference between having skin in the game and having your entire account in the game. So, like, if you have a $100,000 account and the market's going to be like crap, but you have to have money in it, okay, well, put $1,000 in it, right? If you have a $1,000 account, put $100 in it, but you don't have to have your whole account in there. I have this, I usually keep, no matter what, my account 30% cash for what I call black swan events, for the GMEs, for the short squeezes. It's like, if you don't have the buying power available to catch those huge market moving events, what are you supposed to do when those happen? So having that war chest available is just as important as having profitable trades, because you got to have money to make the trades, because if you blow up your account and then all of a sudden the huge winner comes but you don't have money to play it, what are you supposed to do in that situation? I think that's where a lot of people struggle. They feel like they have to go, like you said, go all in on a Tesla call with their entire account.
Yeah, I have a friend that does the same thing where everyone has the FOMO, so he puts a tiny bit in so that he gets rid of the FOMO, but he doesn't take a crazy risk like you were saying. I think it's great advice. All right, so if I go back to people in your high school, your friends, your teachers, anyone around you at that point, and I talk to them about you, would they be surprised at where you are now, or would they be like, "Oh, that guy, he always had it in, and he was always different"?
I don't think they would be surprised. I mean, I was always kind of a nerd growing up, so I mean, I'm tall and athletic, and I played a lot of sports, but really, my passion has always been like nerdy things. Like I started the chess club in high school. I was part of the computer science club, but I was also, say, on the football team. So I was like kind of that weird nerd jock before that became like this was before that kind of stuff was not popular. So I always tended more towards the nerdy stuff, even though I've always been super athletic. But it's just, for me, I get more enjoyment out of it, right? Video games and coding and all of that.
We talked a lot about money, but obviously it's not the only thing important in a rich life. So what's a rich life to you?
I don't need $1 billion. I wouldn't say no to $1 billion. But, I mean, to me, having enough money to do what I want to do with my family and my friends, and to live comfortably and not worry about paying the bills, that's what life's about, in my opinion. If my wife wants to take a vacation, I want to be able to afford that. If my daughter wants to buy a video game, I want to be able to provide that. If she wants to go to Harvard, I would love to be able to say yes to that. Like, saying no for monetary reasons to something you should be able to say yes to hurts you more than anything, in my opinion, especially as a father, as you probably know. Having to say no to your kid just because you simply couldn't afford it is something I never want to have to say.
Yeah. No, I totally agree. And that's an interesting anecdote is I had Disney calls, and I wrote it from like 178 to 187 last week or the week before, and taking those profits and taking my kids to Disney World in a couple of weeks. So I think it's important to...
Disney looks really good right now, by the way.
Yeah, it does. But I was like, you know what? Let me just take this and go to actually Disney World and make some memories.
That's a good point. Like, when do you take money out, right? If you never take it out, it's not real profits until it hits your bank account. Like, that's something also new traders should learn. Until it hits your bank account and you take it out of your account, there's always ways to mess it up. So you should always have, like I said, a plan. Say, hey, when I hit this much, I'm going to take out this much. Like, with my small accounts, I usually have a couple, because it's like, okay, well, if I hit 10K, I'll take it back down to 2K and I'll start over again, right? And then I have money that I can go do stuff with. But what happens if you leave the 10K in there and you continue going, and then you blow up your account, and then boom, you're like, dang, I should have taken that out. Well, F yourself, take it out.
What's your plan with the one that you have now, where it went from 2 to 40?
Well, I actually started back over, and I took that out, and so we started a new account on Monday. It's kind of where I started, because it's been a hard week to trade, but we're doing good with it, and we're going to continue with it. But when you make that, you got to take at least half of it out, right? So,
right.
Yeah, it's...
What would you want to hand people off to?
What do you mean?
Like, as we wrap up the show, is there anything you want to point them to? I know you're active on Twitter now.
Yeah, you can.
Obviously, the
Tomikazi1 on Twitter. Thefinancial.cloud is our website. We're also on discord.gg/thefinancialcloud, so real easy to find us. We also have the official Twitter account, official Instagram account, TikTok, Facebook. We're most popular on Twitter, obviously. That seems to be like FinTwit is the big thing. But, Instagram and those other, TikTok is becoming bigger and bigger. So we're exploring doing more and more on there as well.
I will link to all of that in the show notes. And I also recommend people check out the YouTube. I find that it's more valuable content there because you can go more in depth into things.
YouTube is great. We do free classes every Sunday night, free wrap-ups every day after market close at 9 Eastern. So if you want to check out the Financial Cloud YouTube, you could probably just search the Financial Cloud and it should come up right away. It's very popular. We have 8,000 subscribers, and people are always subscribing to it. So if you want to go subscribe and get the notifications, it's always free. We don't do any ads or anything. It's all free. It's because I believe in education.
Awesome. Tom, thank you so much for the time. I really appreciate it.
Thank you.
One quick reminder before I let you go to join my email newsletter. It's going to be like a personal note for me to my friends of all the cool things that I've come across that month. From hacks and tips, interesting stories, products, books, ways to make money, and who knows what else. It's totally free, and if you don't like it, you can always opt out at any time. The link to join is in the show notes, and I hope to see you on the list. And there you have it. If you enjoyed this episode, please remember to leave a review. I may even give you a shout out and read yours out on the show. For any and all resources that we discussed, check out the show notes or head on over to boundtoberich.com. Until next time.